Hey guys, welcome back. Blue Line Realty, Loan Pros team, Roxanne, Chung, Julio, Gaton. We're going to be talking some real estate. We're going to be talking about how you can get qualified for a new loan and get you into a house.
Absolutely.
And speaking of interest rates right now, I know a lot of people are worried about, what kind of interest rate they can get. What's the average interest rate right now?
It's hard to quote because there's so many factors. If you're buying a condo, it depends on your credit score, the product type, but just in general, I'm seeing about 8% on conventional, about 6.997% on FHA.
Okay.
I'm supposed to quote an APR, so you're gonna cut that maybe.
Okay, but at least this way we know some kind of range as to how much the interest rate is actually coming out. Because I know a lot of people were hearing about back in the days when you could get 4% or 3%. Some people were even getting
This is 2 years ago, back in the days.
It seems like it's so long ago. It seems like all of a sudden, like you would imagine that for something that goes from 3% to 8%, this must have been over 30 years. But it was 2 years.
It was
2 years.
3 years.
And they're potentially saying that they might increase it. Is that what they're talking about?
They're talking about increasing it again.
Okay.
They are, but
these buybacks can at least give you a
this
little
is
bit
not
of time.
permanent. You don't have to keep this rate forever.
Okay.
So if you get a house today and the rate is 8%,
Okay.
right? You have it for a year or two. Especially in our market in South Florida where we are, at least 5% average appreciation, right?
Yes.
At least. So next 2 years you refinance if the rates are better, right? And then more likely than not you could remove MI, depending on your situation, and save yourself some money.
Now, is that Mission Impossible? What is MI?
Oh. Mortgage insurance. So
gotcha.
some
Mortgage
loans,
that's an extra fee that's just on there, right?
Yeah, it is.
How does that work?
Mortgage insurance is a fee when you don't put 20% down. It's a fee that technically just insures the lender that you pay.
That you're going to pay because
That's
you're
like,
paying
it's
such
like
a low
their
amount.
insurance for you to default.
Gotcha.
Right?
And that's because you're paying such a low amount versus paying 20%?
20%, yes.
Yeah,
So
exactly.
3%, but there are ways to waive MI or
Okay.
buy out the MI.
Okay.
There's a bunch of creative ways that you can do it.
Okay.
The single payment, you can write off that on your taxes.
Okay.
But talk to your CPA because I'm not a CPA.
Okay.
It's essentially just an additional fee.
Okay. And I know a lot of people are wondering, like, is there any way that I can get a lower interest rate? I've been watching on TikTok and on YouTube, these ideas of maybe doing somebody already has a loan and they have a 3% loan. Can you assume that loan and pay them, just keep paying that mortgage? How does that work?
It's a process. And like TikTok yelling to stop. Because you put on there all this information about assuming the loan, and it sounds well and good, but just for example, someone has a 3% rate, it's great. Some loans are assumable. There's a process. What you need to do is you go to that seller, you guys agree on a price.
Okay.
He owes $200,000 on his house. He would request an assumption package from his bank. You would then put that package in and you'd have that.
So in essence, this person would be paying on a $200,000 loan at a 3% interest rate on a person's house if they would
assume the mortgage. Right.
That sounds really great. What's the catch?
The catch is he wants $600,000 for his house. Do you have the other $400,000 to give him?
You mean just like cash?
Yeah.
I can't get like another loan for that?
No.
Oh. Or if I did get a loan for that, that's going to be the 8% anyways, right?
Possibly. Could be better. Depends.
Okay,
it could
so
be.
that idea
Just
is
stop throwing
really
8% out there.
Okay, well, 6, 7, possible, whatever, but
whatever the rate.
somewhere around there. Okay,
Yeah.
okay, so that
that's
idea
the part
isn't
that they're leaving out on TikTok is that the difference between what they owe and what they want to sell it for, you have to get that to them somehow.
Okay,
right?
okay.
They
I
could
get that.
possibly, depending on the terms of the first loan, the seller could possibly do a seller held second.
Okay.
If the first allows it.
Okay.
And make payments that way, but
it also depends on that seller if they're willing to be
the money.
Yeah, sometimes sellers need that money so that they can buy the next home because they're going to go somewhere else or wherever and they want to buy.
Listen, if I find out one that really works, or I'll let you know what I have going.
But in the meantime, okay.
Yeah.
So TikTok videos. That's
add the last part.
Exactly. Okay. All right. So, are there any other options for somebody to get a loan that could be a little bit? What's the cheapest interest rate that somebody can get right now? Is there, other than, I guess we have the buyback program, super high credit score, can that get you a lower rate? Maybe you're very high income, very high credit, using the buyback program. How low can I go? We'll put the little music right there.
Made me think about the song.
Yeah.
It just depends. options.
Okay.
There's so many things that get added to a rate, and I don't even want to say a rate.
Okay.
But then you have more options.
Okay.
So the good thing is when you have a higher credit score on the lower DTI, the mortgage insurance is typically less.
Okay.
Right?
All right.
So you save there.
Okay.
And my team and I will work like heck to make sure that you get the best possible rate out there.
Okay.
And you always get the option. We always tell you, and here's what the option is, and you just don't have someone just tell you over the phone, hey, this is what it is, and this is what's going to cost.
Yeah.
Get something in writing, get everything listed out, and then ask people to help you look at it, compare.
Okay.
You know.
And so I know that there were people comparing even the idea of having a very low interest rate, because just 2 years ago you were able to get a house for, let's say, 3%, but they were paying astronomical prices at that time. So that same house that was worth 500 is probably going for 700. Prices have been slightly not increasing as much now,
as fast.
Then they're not at a crash yet, and that's a whole nother video right there.
I'm not touching that.
Right. But now you're gonna get a home that is probably a little bit around that price, but the interest rate is 8%. Is it better to have a house that you can get at a cheaper price if, for example, it did crash and now the prices are really low, but the interest rate is still high? Or would it better to have a interest rate that's low and pay a higher price?
It is what it is. The rate today is what it is today. You're buying that property today.
Either way.
But think about it like this. I get what you're saying. You're just gonna, how do they say it? It's so silly. It's date the rate,
but marry the house?
something like that.
Or marry the house and date the rate.
Yeah.
Because you can refinance.
Can always
That's
refinance.
what you're saying.
Yeah.
Okay, but you can't change the house.
Yeah, because right now
You
it's
can't change what you
whatever
pay
it
for
is.
the house,
Yeah.
right? Okay, so then it's probably better to get by now, even though prices are really high.
They're still going up.
Right, they are still going up, and you can still refinance
And
your rate.
listen, if it's right for you,
Mhm.
if it makes sense for you and your family, do it.
Yeah.
Right? We'll give you all the information you need to make an informed decision, but don't just wait and not do it out of fear.
Yes. Especially because the alternative isn't that much better because...
Yeah, because your landlord can raise your rent at any time.
Exactly.